Hey, what's up YouTube? Thanks for tuning in. I'm Chad. Just want to run through some of the individual tax reform changes that could be coming our way next year. Now look, I'm not a CPA or a tax guy. I'm just pretty good with numbers, so kind of hang in there with me. Hopefully I can help clear some stuff up for you. All right, first we got to define some terms here. So deductions, they reduce the amount of income you pay taxes on. So if you have $100,000 adjusted gross income, $10,000 in deductions, you're only going to pay taxes on $90,000. Now for exemptions, they work similar to deductions, but they're given on a per person basis depending on how you file. So if you file a single, it's a $4,150 exemption. Married with no kids, $8,300, and then just so on from there. Then you have credits. These are going to be a dollar for dollar reduction in the taxes you owe. So if you end up owing $1,200 in taxes after those deductions and exemptions, and then you get a $1,000 child credit, you're only going to owe $200. All right, now we got that standard deduction. So this is just that set dollar amount you can use to reduce your income. After that, there's itemized deductions. So these are expenses you have during the year, and if they add up to more than that standard deduction amount, you can use this higher number to reduce your income. So some of the more popular ones are the mortgage interest, property taxes, state taxes, and charitable donations. So right now, 70% of taxpayers use that standard deduction, so only 30% of taxpayers are going to be affected by the changes to these itemized deductions. Even then, it's kind of depend on which ones you use and the actual dollar amount for those individual deductions. All right, now we got non-refundable tax credits. So again, these are used to reduce the amount of taxes you actually owe, but on these, if you owe less taxes than the actual credit you're getting, you don't get it back as a refund, you just use it to reduce your liability down to zero. Some of these are going to be the adoption tax credit and the child tax credit. After that, you have refundable tax credit. So these are like an actual payment you've made to the IRS, so you're entitled to get it back as a refund, even if you owe little to no taxes. So some of these are going to be the additional child tax credit and the earned income tax credit. Now for this one, I just put up some stats from the 2014-2015 tax years. So the first three are from 2015 and the rest are 2014. Again, I'm a numbers guy, so just wanted to share these with you. All right, now we get into the actual changes. So these are going to be based on the House bill that has passed, and I'm using 2018 for the current system. They've released those numbers, so we'll go ahead and compare those. So right now the House bill, standard deduction is going up to $12,000 if you're single, $24,000 if you're married. They've kind of gotten rid of the head of household and married separately categories. You're basically just single or married now. The exemptions are going away. The child credit's moving up to $1,600 from $1,000, and they're adding this new adult credit for the taxpayer and spouse if you filed married of $300. Now, as far as what's going away for the itemized deductions, you got quite a bit. So it's the state income tax, medical expense, mortgage interest on a second home, your tax prep fees, teacher costs for supplies, clean air vehicle, student loan interest, all those go away. They're keeping a few of them and just changing them slightly. So property taxes can be capped at $10,000. Your mortgage interest deduction is only going to be good for the first $500,000. So obviously the interest tied to that first $500,000. So this is going to be on new loans though. So if you have a current mortgage, you're not going to be impacted. Some of the other things, the alternative minimum tax is going away. Now the estate and death tax, they're going to double the limits, but it's going to end up going away by 2024. That adult credit also is scheduled to go away in 2022. So as of right now, the earned income tax credit remains unchanged. They haven't done anything with that one. Moving on the tax brackets. So current system has seven different brackets. They're looking to move it down to 4. Moving down the rates. Also, the biggest thing I think is changing the limits on those rates. So higher limits are now going to be at lower rates. So when they say the wealthy are going to benefit more, that's true just because more of their higher income is going to be taxed at lower rates. All right. Now, as far as the House bill that has passed, comparing to the Senate bill, which they're going to take up and start discussing next week, the deductions stay the same, exemptions still go away. The child credit, they're talking about moving that up to $2,000 from the $1,600. Now, there's no adult credit, but they do have a non-minor dependent credit, but not one for the actual taxpayer or spouse. As far as the tax brackets, they want to keep 7, but they want to bump down the rates a few percentage points. They also are going to adjust some of the limits. So kind of the same idea. They want more income taxed at lower rates. So again, still will benefit the wealthy because obviously they have more income that will be taxed at lower rates. All right, now getting into some examples. These are just going to be real basic. All of them are no kids, no credits, nothing like that to begin with. I'm working on those. There's a little bit more numbers stuff to figure out, so I'll be coming up with those later. So right now we got some basic ones. So single, no kids, lower income, $25,000. You got your standard deduction and your exemption. brings your taxable income down to $14,350. Now I used a 2017 tax table. The 2018 tables aren't out yet, so the taxes owed may be a little different. Shouldn't be that big of a difference though. So they're going to be owing $1,683 on the current system. Now I'm using a withholding rate of 10%. So with $2,500 withheld throughout the year, you're going to get a refund back of $817. So moving over to the House bill, you can see the change to the standard deduction and the exemption. So taxable income actually in this example ends up being less. So taxable income is 13, and you're going to be charged at that just initial 12% bracket. So you end up owing $1,560, but with the credits of $300, that adult credit brings it down to $1,260, and with that same withholding rate, so you're actually going to get a little bit better refund at $1,240. Next one, we're just going to move up the income, $50,000. So taxes owed on this one is $5,570, and with that same 10% withholding rate, you're actually going to owe $570 on the current system. With the House bill, you're going to actually get a refund of $740. All right, moving up, $120 as far as income, they're going to end up getting a refund. Now on this one, I bumped up the withholding rate to 20%. Obviously, you're going to be at a different tax bracket, or a different rate anyway, so you need to bump up that withholding rate. So this one, first example, current system, $400 refund. The House bill, you're going to get a refund of $3,150. Again, that's because higher income is now being taxed at lower rates. All right, now we got a percent of a 1% example. So gross income, $525. They're going to end up in this example. Again, I bumped up the withholding rate. You're going to have a higher tax bracket, so I moved it up to 30%. So current system, you actually owe a little over $2,000. The House bill, the way it's passed, you're going to get a refund of $3,502. Again, higher income, less or lower rates, so you're going to actually get more of a refund back. All right, moving on to some married scenarios. So in this one, again, married, no kids, lower income, $50,000. Now you see the standard deduction and the exemptions change since it's married. So on this one, taxes owed is going to be $33.69, withholding rate 10%, so that's $5,000. They're going to get a refund of $1,631. Over on the House bill, they get a little bit bigger refund at $24.80. And then again, just moving up the income. So this example, staying with that 10% withholding rate, in the current system, they're going to actually owe $1146. The House bill, they're actually going to get a refund of $1480. All right, next one again, moving up the income, $150,000. Current system, $6,347 refund. New House bill would be a $10,800 refund. Again, more higher income, taxed at lower rates. All right, last one here, so 1%, so $525,000 gross income. Current system, they would actually get a refund of $12,804, and then the House bill would give them actually a $20,450 refund. Again, same thing applies, more income being taxed at lower rates. All right, that's going to do it for this one. So as of right now, these numbers could change. Basically, the House has passed their bill. The Senate's going to pick up theirs as far as talking about theirs next week. Who knows what they're going to do. I think the process after that, if something does pass through the Senate, they're going to go back and forth with the House to figure out what kind of bill they want to push up to the president, and then for him to sign whatever he's going to do. So after that, what I plan on doing is giving you guys some more updates, some more videos with updated numbers depending on what comes out of the Congress. So just kind of stay tuned. Anyway, hope you liked the video. Let me know what you thought in the comments below. Till then, see you next time.